Ladies and gentlemen, good day and welcome to AIA Engineering Limited Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to the management. Thank you, and over to you, sir.
Thank you so much, moderator. A very warm welcome to everyone. This is Kunal, and as always, I've got Sanjay Bhai on the call here with me, and both of us will walk you through the results for the first quarter of financial year 25-26 and a broad update on the business. I will start with headline numbers for the business for this quarter, and then we'll get into Q&A. We produced 59,500 tons. And we sold 60,156 tons in the quarter. This is flat as compared to first quarter last year, and from a sales standpoint, and compares to 68,000 tons that we did in the fourth quarter last year. This translates to about 1,026 crores, 1,026 crores of revenue, and a realization of about 170 rupees per kilo. We've got 12.93 crores of other operating income, which includes export benefits, and another 108 crores of non-operating income, and all of that translating to an EBITDA of about 420.39 crores at 40.46% EBITDA, and a profit after tax of 305 crores. That compares to 259 crores of PAT in first quarter last year, and 285 crores in the sequential fourth quarter of last year. Moving on, our other income of 108 crores includes 88 crores of treasury income, which is up from 73 crores from first quarter last year and 73 crores of fourth quarter last year. There is a 19 crore foreign exchange income, both combined taking the non-operating other income portion to 108 crores. Working capital largely continues, on track. There's a slight increase in finished goods. But it's flat. It's broadly flat. Raw material has slightly reduced. Receivable remains flat. So overall working capital in line with every quarter. From a tonnage standpoint, again, flat numbers is comparable to first quarter, 36,000 odd in mining and 23,000 odd in non-mining, which is cement and utilities, for a total of 60,000 tons, almost in line with the first quarter last year. The 10,000 ton reduction in mining volume compared to fourth quarter, and a slight increase in the non-mining portion. Our net cash stands at 4,083 crores. Our investment plans for this year, we've spoken about plants in China and Ghana. Both those plants are we're looking to acquire land. We are applied for all sorts of permissions. I think end of next quarter or the quarter within next 2 quarters, we'll share more updates on, because it's our first time going outside of India and we are learning the procedures for both land acquisition as well as various pre-production approvals, and both appear to be a little long drawn than what we had originally estimated. So for now, we continue with both the plans, and we'll share a little more light about what we are doing with that, in next 1 or 2 quarters. Apart from that, we are continuing to make a small investment in renewable power. We are at about 38 megawatts as of date, and we are adding another 60 odd megawatts, taking it to about 100 megawatt plus. And when all of it gets commissioned in this fiscal year, almost 55% of our power will come from green sources, from renewable sources. So we are very proud of that, of not only achieving the green milestone, for our power energy consumption, but also it helping us in reduced cost on that account. We'll be doing, in addition to that, for the rest of the year, I'm not still sharing the number for what I'll be spending for our plants outside of India as far as CAPEX is concerned. But outside of that, we expect about 50 crores of general maintenance, some land, some warehouse, all of that. and about 40 crores for the renewable, the balance part of the renewable. So about 100 crores spent in addition to anything that we spend on China and Ghana is our capital projection for this year. Lastly, one good news came this quarter was related to the Brazil sunset review, where the department has reduced the CVD component. The anti-dumping portion of it got discontinued. It was a total duty was at 11.8, which had CVD, and the anti-dumping got terminated, and the CVD portion is now down from 6.5 to 2.9%. Total duty now on anti-dumping account is at 2.9%. That's a big relief and validation of what we've been telling not only authorities in various countries but also our customers, that we absolutely follow fair pricing strategy and for fair pricing practices, and and that's something that it's taken a lot of effort to put things in perspective, to make sure that the case is heard appropriately. And the same thing is what we're doing with other jurisdictions where there is some sort of conversation on the duty front. The US anti-dumping stands at 9.8%, 10.07, about 10%. But of course, there is a much larger Trump tariff that we fall under the. All of us will face 50% duty, if it continues as it is. So to that extent, there is some uncertainty on the US account, but we are in discussions with all our customers as we speak. Most part of our volume in US continues. Customers want an alternate source, for this product. So beyond that, beyond customers telling us we'll continue for near term, we may not be able to share more commentary as we speak. We would rather wait and watch, see where this settles down, and have a little better view on what happens to our US business.
So just to add, this 50% duty that we are currently paying is nothing to do with the recent reciprocal tariff announced by the US President, Mr. Trump. This was already applicable to us earlier under Section 232 from January, I think from February, initially 25%, and then about a month ago increased to 50%. So, this is just to clarify, this has nothing to do with the current new wave of tariffs, which has, because this we were anyway paying, customers are paying even as on today, this duty plus this 10% anti-dumping which Kunal talked about, and the supplies continue.
Exactly. I think Sanjay, any other updates you want to share?
So, okay. Of course, preempting a common question that how do you look at this current scenario, because we have been doing around 60,000 tons of sales. We did about 250,000 tons, 255,000 tons last year. What could be the outlook for this year, etc. Preempting those questions, I want to just make it very clear that as we had indicated even in the last call, we are absolutely clear and bullish on the prospects of conversion for the large number of mills that we are looking at, from the forged to our high chrome solutions. With this and tremendous work, even in terms of re-strategizing, our whole approach has gone into it. We are working with a very large number of mining customers right now at a fairly advanced stage of negotiation, and we do expect quite a bit of conversion-related news to start coming in the coming quarters. Therefore, from a very clear-cut management standpoint, we are not at all worried, and we do expect to return back to a decent level of volume growth from the next fiscal. Having said that, this process is taking a lot of time, and therefore this year we feel that we might still end up the current fiscal year with a near flat situation. However, maybe next 1 or 2 quarters, lot of things are happening and we'll be able to give some clarity. But as we speak, we are very clear, we don't see any structural issue, it's just a re-strategizing and now again going back on the track of normal growth, which we expect to start coming from next fiscal with complete clarity. This fiscal we want to wait and watch for maybe 1 or 2 quarters, but we are still, our target is to see what growth we can achieve over last year, but we have no certainty or clarity, and therefore we are not giving any specific growth guidance for this year. I think with this, I'll request the moderator to open the house for Q&A.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yeah, good evening, sir. You mentioned in the end that, there would be kind of a flattish volume. I remember that, the previous call you had mentioned about some growth in and the benefits of the conversion efforts that we are taking to kind of start playing out sometime in this year at least. So is this
I reiterated that. I'm sorry I'm interrupting you. I said we are not giving any specific guidance about the growth in this year and our targets, and I said that we'll probably come back to you by end of Q2. Let us see. We have not said that kuch nahi hoga, but lot of efforts are going on, and I wanted to clarify that 100% from next year we are on track. This year ke liye we are waiting a little bit more for a few outcomes.
Okay, fair point. From a US perspective, given that there will be this 50% duty, do you think our volumes will be at risk if it were to come into play?
Bhumika, your voice broke. Can you repeat? Last part I could hear.
I was saying that if the 50% tariff was to come into play, as anticipated, assuming no, relief on that aspect, for a minute, would that mean that our volumes would get impacted out there, on the US bit of volumes?
No, so Bhumika, as I clarified two things. One, this last round of 50% is reciprocal tariff and not sectoral. Sectoral tariff तो हमको February में लग गया 25% plus last month it was increased to 25 with the whole world knows. Correct?
Yeah. Yeah.
Today also my clients, my customers are paying 50% sectoral plus 10% CVD and they are continuing buying. Obviously, the negotiations are around the corner that boss ये continue होगा तो whether a part of it you will bear or not. So that is a continuous dialogue which our sales people are doing, and therefore our supplies even as we speak continue, though a little halting, but they continue. Nobody has said कि हम नहीं पढ़ेंगे. People are also in the hope that sooner rather than later there will be some, we were talking of BTA happening. People were hopeful that BTA में थोड़ा tariff reasonable level पर आएगा. As we all know, the whole world knows this has now become a little political, more political rather than, really economically the rational decision making process का तो कोई मतलब ही नहीं है. But as we speak, people are paying. That's all I can say at this point in time.
Okay, fair point. Understood. So the other thing is in terms of our China and Ghana, as you mentioned that, it is taking a little longer than anticipated because of the approvals, etc., land acquisitions as such. So what would be a reasonable timeline to look at for, if I understand correctly, China will be first operational followed by Ghana. What would be the right timeline to look at for that plant to be operational?
So, Bhumika, that's what I shared, that our hope was to start with that initial land and approval this quarter. It looks like it's much longer drawn out than what we had imagined, right? It's our first time going in there, which is where it looks like I'll be able to share a plan hopefully next quarter, or fair chance it goes to the quarter after that, and which will be exactly what happened. I can't share 12 months from approval, and that approval is maybe 15 months away, right? So just give us a quarter more. We'll share a little more. Yeah, exactly.
Work in progress. Actually, our teams are there. A lot of work is going on, so that work in progress is there.
Okay, fair point. Lastly, if I look at the margin profile this quarter, has been quite healthy. If anything that you can call out in terms of what attributed to this margin being sharply up?
Okay, so Bhumika, one, if you knock off the treasury income, gain of 19 odd crores, we are talking about 29 to 30% operating margin, which I definitely agree that it is decent slightly on the higher side. There are two factors. एक तो टैक्स प्रोविजन हमारा एनुअल 2% ज्यादा होगा, ये क्वार्टर में कम है. Point number one. Point number two, there is a very good product mix that has also given us the tailwind. Now, therefore, I would believe that on an operational margin, this 29 or 30 cannot be read as a sustainable long term. Of course, we are talking of 23, 24 as the minimum. I will believe we want to stick to that as a very, very sustainable. 23 से कम नहीं होना चाहिए. We are doing better. I believe we might do better, but let's take it as that.
Okay. Fair point. I'll come back in the queue then. Thank you so much and all the best.
Thank you.
Thanks.
Thank you. The next question comes from the line of Priyankar Biswas from JM Finance. Please go ahead.
Yeah. Thanks for the opportunity. And my first question to you is again coming back to from the previous questions, like this very high level of pricings that we are seeing on I mean almost like a 170 rupees per kg. Do you expect that to sustain at least in the very near term? I mean, compared to forged, this seems to be a very high level of premium. So what is your take on that?
Priyankar, I think the realization when we have always maintained is not just a margin reflector, it's also the product mix that we do in a quarter. There's also the price pass through. This quarter has seen freight reduction, some level of freight reduction, some level of raw material reduction, right? So some of these costs have reduced, which will get passed on over a period. So two things have happened this quarter: product mix leading to a little higher realization and lower cost, and hence you are seeing that price. There is an abnormal margin this quarter, which we think will normalize over next 2 quarters.
Okay, understood. And also, if I may come back, I remember in the previous calls you used to highlight like significant opportunities in Latin America, particularly in copper. So what is our progress there currently? I mean, what are the steps or any prospects that we are looking at for near-term conversion?
I think we are status quo there, like Sanjay was explaining the previous participant. Our efforts are on, lage hue hai, right? We are on it. We are making all efforts towards it. We remain, excited and confident about it. We hope to get back to growth stage soon. No, there have been breakthroughs. We are hoping that culminates into something meaningful that we can speak about. We have decided to speak about it after we get that breakthrough, rather than positing it about when and how, because it's been deferred for some time, right? So we are hoping that it converts into a contract and a tangible order, and hoping that that's the gate that opens up for further volume.
Yes, I hope so as well. Let's say within the next couple of years, maybe we see some volumes. And just last one question from my side. Previous year in FY25, in some of the calls you had mentioned that in certain mining geographies there were some excess inventory that was there of grinding media. So that kind of led to sort of a destocking thing. So is it behind us? So has those volumes kind of resumed?
Yeah. There's 2-3 different things that were happening. 2 customers going through destocking. Yeah, they're back to that volume. Looks to be back. That should normalize. Yeah.
Okay. That's all from my side, sir.
Thank you.
Thank you. The next question comes from the line of Devan Shah from DD Enterprise. Please go ahead.
Yeah. Hi, sir. Am I audible?
Hi.
Yes, sir.
Yes.
Sir, I'm an individual investor. I have some 2-3 minor queries only regarding the cash we are holding on the books. So is it for Wellcast? Because the Wellcast buyback was not being gone through. So any plan to like utilize the same cash which we are holding on the books?
No. So, Devanbhai, I think there is some confusion here. Wellcast, we never had any buyback. It was a delisting attempt which was not successful, and that was a very, very insignificant amount actually. So, this cash has been conserved for quite some time, considering the fact that, we are very, very optimistic about the tremendous growth potential that the business has. And therefore, given the fact that at any point in time, some or the other opportunity could unfold, we are a bit conservative. And in the past also, we have said that once we believe that the business has all the endeavors that we are giving for growth, they have sort of stabilized, we will look at options for reducing the level of cash. But at this point in time, we agree, we are admitting that we are maintaining a little higher level of cash, and we want to do so more on a conservative basis given the potential that we have.
Okay. So, and the other question is, like, can you just tell me, like, who is gonna be over there for next 5 to 10 years for the management controlling? Because the owner, his age is very much near to the, like, retirement or something like that. Like, so is there any follow-on plan also is there? Like, we are going to get it from the management, or you are going to get it like professional management outside of the company? So any follow-up plan for that?
So एक बात समझ लीजिए, there is no question of any management outside of the company. We are in fact professionalizing this for our last 3-4 years. There is a very proper succession plan strategy which is under implementation. The idea is that the whole management and the organization should run strictly on professional grounds, and all the efforts are on. So there is no question of any outsider coming and running, etc., etc. But yes, a proper succession plan is under implementation, and it will be properly and formally implemented over a period of next 1.5 to 2 years.
Okay, so that's all. That's all from my side only. That's fine.
Thank you.
Thank you.
Thank you. The next question comes from the line of Varun Jain from Dolat Capital. Please go ahead.
Yeah. Hi, sir. Good evening. So, my first question was on power and fuel costs. So, if I look at your power and fuel cost as a percentage of sales, from FY20 it was close to 10%, and then it has been falling. So FY22 9.2%, and now FY25 7%. So as the renewable power mix increases, where do you think this will settle?
Renewable, see, at this point in time, we are, I think, about 35%, 30 to 35% at the renewable level in terms of our actual credit that we are getting in terms of generation through wind and solar in our billing. We are investing about, we are putting another 100, total 60 plus megawatt, which will take us to about 100. So मेरे हिसाब से there is a very decent scope of further reduction. It should settle 7.5%.
So 7% already in FY25 only you reach. So it should go to close to 5.5 or 6%, right, in the next 2 years.
Yeah, it should reduce further. It will reduce further. There will definitely be saving, and you can take around 6 to 6.5. You're right.
Okay, and my next question was, so your in this quarter the margins were very good. So one of the reasons you told us was that product mix favored realizations, and the freight cost was low. But was there also a raw material cost impact, like ferrochrome or alloys you got at a cheaper price?
I always work with 100% pass-through, so you are very right. In a given quarter, if the prices have gone down, but our sales realizations are as per the previous agreed level, there would be a decent push-up on the margin. However, in the next quarter, so I explained to Bhumika, one of the earlier participants, that yes, there are two factors. One, you have to knock off this other income, treasury income, etc. तो वो आपका करीबन 30% बिकता है at the operating level EBITDA. Correct. Now that is slightly higher than what we normally do at about 27 odd %. That is what the run rate with which we have been generally reporting. इसमें दो है, एक तो हमारा टैक्स रेट ये क्वार्टर आपने देखा होगा इज अबाउट 20% अगेंस्ट नॉर्मली अबाउट 23%, 20.8%. तो ये पीबीटी लेवल, पीएटी लेवल पे इसका इम्पैक्ट आपको दिखेगा. सेकंड, देयर इज अ वेरी क्लियर कट स्ट्रॉन्ग टेलविंड ऑफ द प्रोडक्ट मिक्स. So the bigger castings, as we call them, उसका dispatch ज़्यादा था and they are very profitable. So therefore there is a little bit of push. And then as Kunal explained, there will be a pass-through effect which will come in the next quarter, which will normalize. So आप उस हिसाब से देखेंगे तो we are okay. We should look at the normal level of margin only rather than extrapolating this.
Okay, sir, got it. And my last question was, you had given some light on this, that you lost, I think, 30,000 tons of restocking volumes were lost. So you said there was some recovery. So out of that 30,000, how much have you recovered?
The 30,000 was not a restocking account. There was one customer where we lost some volume. It was, I think we will not be able to break down every single customer that way, but the destocking, that customer is back up, the volume is back up now. That there was a 8,000-10,000, I think 7,000-8,000, 10,000 ton difference on that account. There were other customers who had reduced purchases on that account. I'm not sure what is the current level there, but the billing process change related that, one customer that's back to, regular invoicing. So that will reflect full year will be the full potential. That reduction has been made good.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next question comes from the line of Bhavin from SBI Mutual Fund. Please go ahead.
Hi. Good evening, Kunal. Good evening, Sanjay bhai.
Yes.
Yeah, good evening.
Could you talk about the mill liners? We commissioned the plant. Have we seen stabilization? How is that ramping up? And if you could also talk about, because that would have, a strategy was to actually first get into the existing customers so that they know AIA, they know the AI qualities. That cross-sell opportunity was one that would have helped us.
Correct, that's true. Beyond the mill liner, as you know, the metal mill liner, we've also added, the rubber composite capability. So I think as we went into the space, as we understood, the overall offering, the one is it has taken longer than what we had imagined. But having said that, this was our time where we have right-sized our offering. We've done some amount of trials. Right, customer went back and said your references are for this ore or for this metal or for this size of the mill. So a lot of that, was, who's going to give us that first trial, who's going to allow us a trial that allows us subsequent sale or subsequent size and, ore configuration. I think that's what's taken up time. I think so. If Sanjay, we can speak more, but for today's board meeting, for example, there was a 2-hour discussion just on the sharpness and the potential for the mill lining solution, right? How it's all coming together, and the solution is for us to sell liners and grinding media together. So that's the customer we are looking at. So there were some customers where we had the chance to sell just linings, but we want to keep the capacity available because we are fully committed and believe in the solution where disproportionate benefits can accrue by using our design material, our design and our material of linings along with our grinding media. Both are in sync to actually deliver the full solution that we are pitching to customers. We are hoping that we have good news to share soon.
So just to add to what Kunal said, what we are bringing on table now is something very unique, which very honestly mining industry has not seen before. And that solution has been already tried and tested in a couple of mines with excellent results. Based on that, we are now approaching on a combination of a solution where cost becomes, I would say, secondary or tertiary. Primary, it is the grinding efficiency, the throughputs, and how we are doing a combination of different types of liner designs, very unique, which increases the grinding efficiency and the overall benefits which a mine gets is unimaginable. I think that is what is giving us tremendous confidence. Okay, very soon we should have some very good news to share. That's all I can say at this point in time.
And what would be the utilization of the plant currently?
I think so. We moved some of Oda production also onto this plant, but the utilization for the overall mill lining capacity would still be small. I don't think we'll be crossing 30,000 tons. We'll still be between 25 and 30,000 tons for the full year mill liner. And capacity would be in addition in excess of 75,000.
7,000. So
both, Oda and
little lower than around 40 to 50% at this
less than 40%. Yeah.
But 75 is the capacity and utilization.
Yes, some part of it is fungible, but I would say we are doing between 25 and 30 of a 75,000 ton capacity broadly.
Okay. And just to understand directionally, how different are the realizations for the mill liners versus the grinding media?
The selling price is, of course, little more in mill liners because the cost of the alloy is different and there is a lot more subsequent effort, right? We need to do drawings, designs, people need to travel for that, collect information, make wooden patterns, then a sample piece gets made, then a finished product, then there's post-treatment. So the whole host of investment into patents and the engineering work that needs to be done before and after the product is made is significantly higher, the cost on us, right? So when you factor all of that, the selling price does go higher than grinding media, but the margin on that selling price I think is largely comparable. As a margin as a percentage is comparable.
Sure. No, just trying to understand because if you see our weighted average. We've been doing $1,700 a ton. So, just to get the differential in terms of realization.
But see, we also do vertical mill parts and that volume also shifts. Within vertical mill parts also we do like 6 or 7 products. So prices vary from, just to give you a sense, from let's say 180 rupees to maybe 400 rupees a kilo, right? And that depends.
Yes.
Exactly. Because we do machining on some parts, there are many other parts where metal dies have to be made or metal, fabricated parts have to be made for the wooden pattern. So the investments vary and the processing on the material varies and the effort as pre-production varies. So that is where for us it's sometimes difficult to break apart each piece and add up, and I understand that 170 is a high figure, but like we said, that reflects a little bit of the higher dollar rupee and the product mix, and the margin reflects some part of lower cost also.
Sure. And when we were looking at the export data on country-wise, there was a very sharp drop in the volumes to Australia from 37 to 40 odd thousand we saw in 22 to 23 to all about 15 odd thousand. If you could just help us understand the reason for sharp drops to Australia.
My request is let us take this offline.
Okay.
Okay.
Sure. And this last part when you said flattish volumes this year, there was some inventory drawdown that was there, inventory correction by the customer, which was there about 8,000-10,000, which we expect to normalize, and this some increase in the volumes that can happen from the mill liners, as you're saying. And despite that, the flattish volume guidance is that. We just want to understand.
8 or 10, by 8 or 10 also is flat for us. The idea is that we have to get to 30,000-40,000 tons, and a 10 or a 15 or a 20 is still, not volume increase that excites us. I think Sanjay Bhai is, without having to nitpick into 5 or 7 or 12, he's just saying flat, saying it will vary in a 10,000 tons. Something else may go down, something else may come along. But overall, this year, as we look going forward, with new contracts coming in later in the year, factoring all of that, it looks like it will be a flat year. And when we say flat, it will be between -5 and +15.
Yeah. And I'm very clear. I also said that by the end of this quarter, we should have much better clarity on a few large contracts or assignments that we are working. So I think you kindly wait for a quarter more. I think we are working on so many other projects, and with this novel approach, we are getting fantastic results. So it's just a matter of time, very honestly. That is why we said, otherwise, we would be not in a position to give at least this indication. But I think it was a very exciting response that we are getting, and hopefully we should be absolutely on track in terms of normal growth from next year. And definitely we are targeting some volume growth this year.
Sure. Yeah. Thank you so much.
Thank you. The next question comes from the line of Amit Khetan from Laburnum Capital. Please go ahead.
Hi, Sanjay bhai and Kunal bhai. So if we've AIA faced challenges over the last 3-4 years, right? But if we just look at the industry volumes over the last 5 years, specifically in mining, would you have a sense of how much the high chrome industry in mining has grown in absolute terms?
High chrome is what us and our competitors are doing. So volumes in high chrome are largely limited to what both of us are doing. I don't know the number on the top of my head, but we'll just have to do that math. There is no new player per se who's come in, done
Exactly.
No, but the competitor would have also gained some share from you, right? By way of in countries where there are duty structures. So just trying to understand how much is taking place at the industry level.
What I'm saying is, if volume has moved between them to us or us to them, the industry has remained flat and there has remained still a sum total of what both of us are doing. That's what we are saying. So the industry has grown to the extent we have, basically. If we have lost some volume, it's gone to them. Generally, it would have gone to them, or there's something the plant has shut or plant has reduced operations or whatever. So, the high chrome share is what volume of both of us added up would reflect.
Got it. So broadly, over the last 5 years, at an industry level, there has been very limited conversions. Is that what you're trying to say?
Possibly. I mean, that's the total, whatever the math was to, yes.
Okay. And secondly, when you talk about, forget about this year, but let's say about on a normal year, when you're talking about 25 to 35,000 conversion, new addition in volumes, how much of that are you factoring in, say, new conversions, and how much is just a regain of old volumes, which now because of,
I think there will, what third is that given our exposure, see, we are not per se a one-trick pony where it's one customer, one geography, one product line, right? We are selling to more than 120 countries. We're doing cement and mining. Within mining, we're doing 2 or 3 ore types, right? So given all of that, there will always be macro. What we are learning is there will always be macro factors that will keep coming along and, putting some headwind that we need to figure out and work to. So what we are saying is, when we are saying growth, when we are talking about growth, it is all new conversion from coke to chrome. Now some volume that's gone away, it will come back. That is basic arithmetic between us and the competitor or whatever that macro situation may be. We are not considering that when we are talking about growth coming back, all the growth figures that we want to hopefully share soon.
So, just to add, it's a fact that over last few years you might not have seen a great amount of conversion. This is a function of 2-3 things. One, though the efficacy of our solution is universally accepted by the customer, there is always a great deal of resistance on their part in converting due to a wide variety of reasons. So what we decided that we must make it so potent that the customer would definitely fall for it. So there is a local factor, there is a local competition. Today I am saying that now with the mining liner related solution plus the DP related benefit that we are offering plus a very unique type of media solution that we have got, as a package it becomes so compelling that we have started getting very good results. Couple of projects have shown extremely encouraging results and the clients have Right now, they are in the process of negotiating some significantly large higher volume of orders. That has given us confidence, and we have now approached many mines. So what is happening is that we have also climbed up the learning curve in terms of our capability and our potential to break into mining based on efficiencies rather than cost. Mining industry, each mine is typically 50,000 crore kind of a company. इनके लिए small volumes or small savings are not relevant. What is relevant is if we offer something which is a game changer, that is where the whole conversion happens. I think we have climbed up the knowledge curve and it's just a matter of time. We should start seeing definitely better traction in the coming quarters.
Got it. Thank you. That's very helpful.
Thank you. As there are no further questions from the participants, I now hand the conference over to management for closing comments. Thank you, and over to you, sir.
Thank you so much. As always, Sanjay and I remain available offline to clarify or speak on any other questions. Thank you so much and have a great evening, everyone. Thanks.
Thank you.
Thank you. On behalf of AIA Engineering Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.